it in. So once it's flagging above this res, so your inverse head and shoulders is a great play, but we want this like retest flag move for the actual bullish trend move. And that's what we're playing, and that's what we looked at last week. So I've rewound this to the day, or rough day we called it. And I'll show you how I make my plans in terms of where I want to get in and where I want to get out, which I'm sure comes as no surprise, is based on volume profile. So I've drawn from the last time it was up nice and high. Is that current price? Is that about stuff? Delete some of these for now because I'll redraw them. So this goes back to somewhere back here. So from the start of the last proper bullish move till now. And we've got this profile. So this is obviously like our big move profile. So it's not going to be as granular as we need it. Whether you use this or whether you're using candles for your support and resistance level is up to you. You'll probably end up with roughly the same ones, or close enough to the same areas. They'll just be obviously slightly out because you'll use like wick bottoms, like this wick bottom down here, rather than the shelf, basically, which is what I've used. So they'll be slightly off, but you'll get all your levels put in, and I generally will try and chart as much as I think is sensibly possible, at least for the first while. Obviously I wasn't expecting this to run from like $2 up to $7 this week, so I didn't really have to worry about going any higher than these levels here. But these are like our initial levels of what we want to do. So this is our trade plan in terms of exits. Delete these as well because that will come later. So these are our exits on where we want to eventually get the trade to go to. And then we want to work on our entrance as well. So obviously this isn't going to help us in terms of where we want to buy it, because this isn't very helpful. I mean, all we've been marking out down here is this little low volume node here. And chances of it coming back down there isn't great. And if it did come back down here, then it's broken the neckline of your inverse, so it's lost its support on the flag anyway. So we're not super interested in that. Obviously, VPOC would be one thing we could note, which is sitting there at 170s, 171. And that's obviously where the most volume's been traded in this area, but it's not too noticeable compared to this one down here, so it's not super important again. So what I tend to do next is then do the same thing on just the trend move that we're on. So if we pull that back to here and we'll zoom in, we'll see what's happening. So this will be how we work out where roughly we want to get in. Oh, I've got one drawn, so that's even better. Delete that. So if we take this trend move, so it doesn't need to go the whole way down because we don't want it failing down here. So we'll just draw this bit and we can zoom in and have a look. So we'll zoom in time frame as well. 15 minutes. Get a bit more granular. Move this to the end as well. Might be helpful. So we've got our exits up here, and we know what they all are in terms of whether they're high volume nodes between them or low volume nodes between them, from our big profile. But now we're down here. So obviously we had this initial trend move. So the people that were playing originally, they had the move up to here, and that's where it peaked out on this day. And you can see this is a mess. There's not enough volume traded in this. So this trend was never just going to keep going. Like, it wasn't any mad high volume days where it's getting on the gainers list and day traders are playing it. It's just kind of walking its way up. So it was always going to stop, turn around and come back down, which is where we want to play it. But when we're looking at this, there's obviously the same ideas in what we want to do. So these are like our smaller levels, so we can draw levels. Oops, it'd be helpful if I actually drew the levels. So we can draw levels down here. You've got that node just there, 170s, down to this level here is kind of where we want it to be holding. We don't really want it coming further down here. So that is like our bottom of our flag that we wanted to hold. So we wanted to trap in all the people that were playing down in these levels down here. So even if you wanted to use that as your support level, it works out the same. So your highs over here, it's the same thing. Obviously, by breaking this high, we stopped out shorts, so that's why we've got this gap, this void in volume. So this is where we want to get, but the problem a lot of people will have is they'll buy when it gets here. And I mean, you could buy when it gets here the first time, but I mean, we've seen these plays hold flags for weeks. And you don't really want to be sitting in this trade for 3 weeks, 2 weeks, just with your money sitting there doing nothing in the hope that it will eventually turn up and go. So we've got this, what we really want to watch this do is fill out areas that we wanted to fill out. So make sure my magnet's on before I start drawing, but what we want this to see, if we want this to hold here, then we pretty much want this to fill out like that. So we want proper volume to be traded in this area up here. And that should fill out, obviously, what we talk about in terms of balances. So there's a terrible square, but you get the point. It should fill out in this flag. So we don't really need to trade until something like that happens. Because if we've had this move already, then all the people that were short down here, they're the ones that caused this run. So we don't really have much fuel anymore. And obviously we had buyer exhaustion because it turned round. So we need another trap. We need something else to fuel a move, and get people stuck on the wrong side and get people interested in getting to play. And that's obviously what they do in flags, because flags are basically just another liquidity trap. So that's what we want this to do. So we're not, I mean, we could buy here, and if you're playing big size, if you're playing like, I don't know, what's this, $2 stock, if you're playing 50,000 shares or something, you can nibble 5k a day or something. And you could have bought this, but what we kind of want this to do is, first off, is to show us a higher low and to prove this is the low. So it's going to do one candle at a time. Yes, okay, send. Right, so that is our next low. So quite obvious there. So we've got a higher low in place. I'll let it stop there. We can take this. Oops. Take this over. What it's doing now. So now we've got our higher low in there, and you can see it's starting to form this, what we wanted it to do. So it's held this low volume node twice now. This you could have played as a viable dip off here. Even if you looked at the day session, you can see here that there's shorts stuck down here. There's volume in this area. That's exactly where it bounced off, is right on those shorts, right in there. So that could have been your first viable dip here. But again, you want to make sure you're in the right trend. So by getting the lowest buys here, you could add a few days onto your trade. So unless you're scaling in, you don't want to force it and sit in here too long. You want to be buying as soon as you know it's going to go within the next day. And then you've got both a risk in terms of the chart and a risk in terms of time. So if it doesn't move by the time you expect it to move, you can stop out and reevaluate and try again. You can take 2% green, walk away, try again the next day, rather than just sitting and hoping, which a lot of people tend to do with swings. So now we've got a higher low, we've got something interesting to play off. So generally what I tend to do is get a half position in the flag. So we'll find our halfway point in the flag. So, I mean, you can do it by price. The easiest way to do it is just to draw fib on it, to be honest. So we'll do that. If it will snap on this bottom low. There we go. So there's our half level in the flag. That's that. 185 is our half level. So all we need this to do now is to give us a reason to play off 185. And look for 185 to be viable dips. So this isn't really a viable dip unless you're super good at checking where this daily volume is and you want to buy off here. What we want to do is watch for things to get a bit more interesting. So we'll go through another day or so here. And we'll see what happens. So now that we have a full day traded over this level, now we start to get a bit more interested in the trade. So this is starting to be when I'll put alerts in, alerts on my trade. So what we've got now, if you look at this, oh, where's my wee snippy tool? Oh, here. Alright, let's take play this. So this is our half level, and that's pretty key for your flags. So you're halfway in a flag. If we can confirm it and go, that's our best buy, we want this area just under here to be dipped by. So you can see this is starting to be the kind of main pivot right under that level. For the first while, everything was sellable under this level. What we want is everything to be viable under this level, and that'll be when we'll be looking to try and get one of these dips. And what we've ended up with here is a pretty noticeable node here and a lot of volume trading in this area. I mean, we can see that happening quite clearly. Volume there, volume down here. So this is starting to give us what could be a trap. So what they're doing up here is they're getting shorts in, and what they're doing down here is trapping. So they're getting dip buyers in here, and they're trapping them to fill these cells up here. So these cells are not being bought through, or they might not be being bought through, probably some people are buying through them, but more often than not, is these players down here in this trap that every time it breaks out here, they're stopping out and they're breaking down the walls up here, because there'll be a lot of sell walls sitting here from people that are just wanting to profit take that were up here. So we want rid of all the people that want to sell in this area up here at $2. So we want this to be an easy break. What we want, some of this nonsense. What we want now is a bit more fill up here, and we want to have something that's a viable dip, noticeable viable dip down here. So right now we're looking at this here as our viable dip level, but we don't know yet if we want to buy it up in that level. So we'll draw that in just now. So this would be where I would put an alert. So I'd put an alert in here, try and take an initial scale. If I see responsive buying now that we've broken this level, we want to try and confirm it. We'll look at what happens in the next couple of days. So that is our first dip under the 50%. And that's our first dip into that zone. So this would be the first time I'd have been alerted that it's probably a good time to look to take a trade. And we'll see what happens off it. So this day would have been a watch. Wouldn't necessarily be straight up buying here. Right, so let me just stop there as we go into the next day. And again, we'll spread this over. We'll see what we've got. So now, what we're looking at is the same idea. So if we compare, obviously that was a lot less balanced than what it is now. So it's starting to form a bit of a stronger balance level. This is a decently good high volume node now. It's been tested on the way back down. And again, so is point of control here, and we've got a little low volume node area in here. So again, we can play off that level. But what you can see with these is they're starting to chew through that. So we've had the touch up there. What we probably want is another touch somewhere up here before we expect it's going to go. Because this is clearly not weakened. That was just a straight up liquidity pool, and it's gone back down. So they've taken some out of it, but they've not really chewed through much of the level. So the next bounce up probably won't go. But we can start looking to buy. So we can start looking to buy in this area now, because we know that this is now a demand low volume node, because we've got shorts stuck on both these pools. So both these V-shaped recoveries have trapped shorts down here. So we could start accumulating this day here on the 25th. And if we did start buying here, your stop would just be under this level down here. You basically just you'd not wanted to break this low, so you don't really want to give yourself a 10-point stop. So I'd probably have just stuck it like 174s, it's just under there. And I would have had like an initial position. So again, another day, pushed up high, failed to break out. But you're still going to probably hold your position. So there we go, there's our second touch. So we got a second touch at that top level now. So you're expecting the next time it pushes, it's probably going to make a better attempt at getting through, because we've now wicked it twice. So this was just a straight up wick. This got some volume traded in it. So they've actually managed to buy up to that level rather than just get smacked off it. And it's pretty clear what's happening here now is they're just filling out this level. So the next time this comes down is when I'd probably look to hit my proper size position. Let me see if it comes down again. Can't actually remember what day I bought. I'm hoping it was somewhere around here, otherwise this lesson is going to not be what I actually traded. Come on, speed up a wee bit. Press play, be faster on it. No, that's not faster at all. Oh, there we go. And don't see if it dips down in pre-market. You don't need to buy in there. You want to trade in the actual hours. Right, okay. So it went the next day. Perfect. Stop. It's not going to stop. It's just going to keep going. Okay, cool. I'll stop it there. Because it broke. So go back to our second touch. So that one that weakened it, we said we're going to buy on the next dip. So your next dip was down here, it was pre-market. So we've got our initial core in here, and we're buying these dips. So wouldn't have bought, that wouldn't have been any of us. That's not going to happen. But you could have bought into close in here, and you could have bought it open on this day, which I'm pretty sure is what I did. And what we're basically doing with this is because we bought in this day here, and what we have down there is a short trap, then that is our risk now. As our initial position is our risk. There we go. So this area here is like a double island. So it's just a straight up trap because it opened gap up and it traded all the volume up here after that. So this is then our risk level, so we don't have to let it go under that. We don't have to let it go under 179, we don't have to let it go under 180. Obviously you're not going to get stopped if that goes under your risk. But you can see what it did was it basically perfectly confirmed the mid flag level. So if you're late to the trade, you could have bought there. But what we have is our core there, and we've got our second adds, which is generally when I add size to a trade, when I know I'm right, is in these levels here. So on the open and close of this day. And what we basically have here is a tiny version of what we're looking at in terms of the daily setup. It's the same idea. That's getting messy. So this little setup here is the exact same thing we're looking at for the daily. So downtrending stock and a flag above it. So when you get this setup inside a bigger version of this setup, because obviously what this whole thing is here is that. That's basically a good time that you expect that it's probably going to try and make a move the next day. So even if you failed in here, you probably could have added this flag and just hoped for an overnight, which we got. So because of this, now, did I pull that over? No. Okay, because this is pretty now balanced, pretty well balanced, and we've got a noticeable trap down here. So this area was where the shorts were coming in up here. So your shorts were coming in up, days. Shorts there, and you've got your buyers down here. These are two splits of the balance. So basically whoever gets stuck loses. So once we confirm this, that was your buys to go long. This I wouldn't trade, that I wouldn't have traded. That was your core. You can see obviously, even if you're just a straight up technical player, you can see what's changing. So we can tell from the volume who's getting more trapped. It's easier to draw on this snippy thing. There we go. So we can tell from the volume who's getting more trapped here and what to play off. So I mean, we could play off the island and whatnot. If you're trading your trend lines, so obviously what we're doing is trending up there and we're trending down here, and this is just horizontal. So we want a change in the trend, but even here you can see what we're doing is forming an upward channel again. So this is when it's changing from being somewhat bearish to being bullish. So we don't want to be buying in here where it's kind of neutral and it's going sideways. So all of these days can basically be ignored as entry positions. So you're not wasting time. This is just time wasting in here, which we don't want to do. Our money should be making money if we're going to be sitting in a trade. Don't want to just sit and waste time. So basically all we're wanting with these flags is to have noticeable traps. So these are our trap available positions. So if we traded like this here, which we don't want to be getting into, if this came down here and failed under this level, or under this trap, then chances are we would have traded the opposite direction of this move. What we did was we came down, we held this as demand, we held it again here, and that's why it's tradable. So you can basically just split the chart in half. You can see being bearish or bullish. So we want to only trade on this side of the trade. Once this mid flag level has been broken, once we've got a noticeable trap, and we can actually play off liquidity, because these flags, like we called it last week, are not just flag or liquidity trap. So we need liquidity to have a trap. And that's why we use this volume profile, because we can see where the liquidity levels are, and then we can watch who's getting trapped. So once we stop trading under the midpoint and started trading mostly over the midpoint, that's when we're bullish. So this was our last day where value was under, which is our core position, because we had something to risk off. So we had a higher low here. That's our higher low. We had that to risk off. And we've got our mid flag as our level to break, which we broke. We've got this, so we get our core here, and then we buy and use our core as risk. And that's why we end up with an average position, which is basically bang on mid flag. And we never really have to risk much of our trade, but we also don't have to risk much of our time, because you can see obviously what happened was as soon as we got our second ads, it went the next day. And what I was saying, he was in the room as well, I was talking to Max, that there was still trades in this if you missed those trades, because these flags, and why I've got noticeable targets on them, is because they're not a 5% move like a lot of the things you see when you're day trading, and you take 2%, 3%, a couple of cents and walk away. These moves are basically, the only reason I trade them is because I don't want to sit in front of my screen the whole time. I want something that's going to make me a good amount of money without trying very hard. Or only really trying before I get in, and then I can go and watch TV. So if we know that at least we were going to get 223s, and if we broke this, which was a low volume node, we'd get 264s. Then we know chances are if we fail here, then our risk is here. We'd end up risking this little flag here, because that is our, again, just another mini version of what this was and another mini version of what this whole thing is. Then that is then our risk, because this is our liquidity trap of this liquidity trap. Then all we're going to risk is this level. So we're going to be green regardless of what happens. If we've got 185s, the worst we're going to do is get a 201, $2 exit, which is still a decent trade. But we know if we break this level, then we're seeing this level here, which is part of our plan. Which basically is all you need to do. So set alerts. So what I would have done was set an alert at 220. I would have set an alert at 260. So I would have front run both of these levels. And when we got up here, it's basically just, does it look like I'm going to get stuck? Doesn't really look like it's bearish, does it? I'll put it on 5 minutes, so most of you guys trade that. So broke it, flagged down and held it. We basically confirmed entry into the low volume node. So it's just a straight up trade up to the top of it where we've got liquidity again up here. And you can see how obviously those zones trade. So they're not basically top tick, bottom tick kind of lines that these are. They're look for the trade to change in these areas. But that was what really only risked 2 days, and we made almost $1 per share. It was a pretty good trade, and this whole day was just an easy burner, and we were just calling out every level as it went up, just out of boredom. But that's how easy they are to hold. And the same thing we're looking to happen again is to form another trap, break this shelf, and push up higher to these levels, and then up to these levels up here, which is a gap fill. So that's basically how I did this trade. And I'll check my broker, but I'm pretty sure I had 185 average. But it's just knowing not to waste your time trying to buy the bottom of the flag. You don't need to buy the bottom of the flag. What you want is to know the bottom of the flag's put in. If it's not, you're not going to lose much. So all we really needed was that little box in there, and that would have done us for this whole trade. And then yeah, so we've been the same thing on this day here. If you missed the entry in there, you could have just joined this day. So we broke out. This is our soak day. So I don't know if you guys read my post on the trading floor. But these like soak days are basically what we want for confirmations of moves, or confirmations of breaks. So our volume traded outside here on an island is basically why we gapped up and we did this move the next day. So that was our confirmation day. So you could have even bought in here, added in here, but I had pretty decent size already. But this is how I organize when I'm going to get into these flags. So it's all about having a confirmation of a trend change, which is one or higher low here, which is when we start looking to actually get into a trade. And then it's just about working out where we want to buy, which is this zone here. So we accumulated dips, and then we add to our position once we've confirmed our own entries right. So you get 2 days where you only actually need to play. You make, I don't know, 60% or something, 50%. That's how I did this one. Because they're not super liquid when we're in these flags. It's not the same way as we do when we're day trading, when we're looking for like a volume break. Because if you got the volume break, you would have just bought this day here. But then you're risking re-entry into the flag. So if you're buying this day, it could have been a couple of days up here. It could have dipped back in a few times. And that's where you end up stop down, stop down, stop down, stop down before you get the move. And then, even though you make money, you've already lost some of it before you did it. So we want to play in here, but we want to play at the right time. And I mean, even on the daily, it's pretty obvious where you want to be trading, which is off these levels here, which is the same 2 days that we traded. So higher low put in, and then we're just buying dips under that mid flag. And so anyway, that's basically how I set it up in terms of getting positions in these flags and not wasting time. So you basically just you get this mid flag level, and you basically just want to make sure that under that flag is going to be demand. And there's loads of ways to do it, but that is how I do it. I mean, you could do it any other ways you want. I know a lot of you people draw boxes, so you could have drawn a box over these V-shaped recoveries. You probably would have ended up with the same levels, or close enough to the same levels. I think you would have got a few cents extra on the bottom. maybe draw a box over that, but yeah, that's how I do it. So you end up with like a bill bear split halfway through the flag. Yeah, this one we played as well. Yeah, so same in this one. Same idea. Let's bring this over. So even on this one, this was our first higher low here. So once we've got this in, again we draw our box. No, we don't draw our box, that's the wrong word. We draw our flag. I'll do this one faster, so it's just like a proof of concept. So that's our confirmation that this is our daily higher low, is having this intraday higher low, or not intraday, but intra time frame higher low. And then we just want this mid-level to be soaked. So this one obviously was a little bit harder to play, but it was a lot easier if you were just a TA person, because you've got a pretty damn obvious trend line coming down there. So you would have just taken the breakout and confirmation of that level. But if you're a volume trader like I am, then it's a little bit, I wouldn't say harder to trade this one, but it's just a little bit different. So we'll bring this over, bring this level here. So same thing again, as we're forming the same trap. So we're forming a trap here, and we're forming a trap here with a kind of mid-level. So look how much volume's traded on that mid-flag level. We can tell there's a fight going on there, so someone's going to get trapped either side. And what we want to see is it change from bullish to bearish, or bearish to bullish even. So this is still bearish. This is our first higher low, so this is where it can change to neutral. So we can see it going neutral in here. It's basically just trading sideways. I mean, this is lower than this one, but it's still higher than here. But then we've just got higher lows, higher lows, higher lows, higher lows. So any of these dips would have been what you could have bought, and you could have just soaked into this level. And you probably would have just added in this day here, or the move further up. But it's all the same idea. You want the confirmation that it's changing the bias of the trade, because it's the same, like everyone says, you don't want to be trying to buy the bottom. You want to make sure that you're in a trade that's already going up, and that doesn't obviously just mean it's going parabolic. It means that the bias of the trade is going up, which is what this one changed doing in this zone here. It changed to be a bullish bias, and you can see what value is doing on each of these days if you're looking at the session itself. So value was down here. Not once did value get down to the bottom of these levels. Every single dip was bought up fast, and there wasn't enough volume traded down there, so shorts get in, they get stuck, they get in, they get stuck, and they're actually trading up here. So they're eating these walls by getting people stuck down here, making them cover into it. So these are when you buy these dips, and not over here. So we let it go bearish, we let it go neutral, and then we get in when it's looking bullish, which is when we got an uptrend over here. So again, you only really needed to risk 2-3 days to get the move, rather than sitting in this for a week or 2 weeks, which you don't really want to do. Waste of time. Right, so that's how we get entries. Exits obviously are from our plan. So you can see 680s was my first exit. I don't think I mapped anything else on this one yet. I'm still holding, so probably should do. And the next thing I think I said I'd talk about is working out what ones are better. So what I'll do is I'll bring up the list that I put out, and we can look at a few of them, and I'll post them, and I'll even let you vote on what ones are best, and we can work out why. So what we'll do is I'll draw a fixed range over these trades, or tradable areas. And then you guys tell me what's best. Hopefully I'll find one randomly that's good and bad. Alright, so I'll put this in. Have you got questions already? Great. I'll come back to them. Where did you scale out some on the fibs? I scaled at the top. Why is that not posted? Oh. Yeah, I scaled out 180s, 160s, I think it was. Or 260s. Yeah, 264. So I was scaling, I basically just put in a limit cells up here, and I was just refreshing them for a while to get my initial quote out. So I probably caused quite a lot of that wick, but shit happens. Yeah, I had an alert at this 220s, but it was just there was no reason to sell, which I think is a problem a lot of people have. Is they'll see targets and they'll be like, oh shit, I need to sell. But I mean, if you look at the trade, there's no reason to sell. It's they had huge volume into close. It ripped off open. It was the first really flag of the day, and it held the level I wanted it to hold. I had no reason to sell. High or low off it, still no reason to sell, and then straight trend all day up to my next level, which is what I expected. So if this is our low volume though, then this is our easy trade zone. So once we get confirmation of here, I know I'm going to get this. So I just sell everything kind of front running up to here. I don't need the top ticket, I've already made 60%. Right, so agents in. I'm trying to find ones that haven't moved yet. What's the chances of that? This guy, you're not part of this. There we go, this one's not moved. QDA. Be our second one. One broke some out because I traded it. Yes. That's not broken. That one broke. I'll put this one in. It's breaking. We can use this one. Launchpad. Yeah, with a potential 5. Yeah, I'll look at that after. Right, so I put 3 random ones of the list in that area. So go and smack some emojis on the one that you think would be the best trade to take. We can see what your reasons are. I've only got one emoji, so someone do something. Come on. You know you want to. Okay, we got 2 on this one. Lol, are you in here, or is he just looking at my charts? He's not, he's just been a snake. Right, is everyone, are you just all going to copy what's happening? Right, okay, so we get 3 on this, 2 if we don't include lol. So, L in college, you want to tell me why you think that one is the best one? Okay, 4. Anyone? Is the last one to vote. Larry. Right, one of the 4 of you tell me why this is your favourite one. Or 6. Right, you're all just copying each other now. This is cheating. Hello, right, okay. Parallel before the flag. Oh, Selwyn's in here. Parallel of epoch. Interesting. Right, so if it's consolidating, like Selwyn said, if it's consolidating at the higher volume node on this fixed range composite profile, then what have we got above it? Anyone? Or ranges. And then if we are holding this area in here, then what have we got above this consolidation in the high volume nodes? Equity. Well, LVN, there we go. Right, so we've got low volume above these areas. And if we've got low volume above these areas, then we've got speed and we've got range. And that's why, obviously, things like Gern are a good one to trade. Because if you look at the initial plan at the start, a huge gap in here, and gaps are low volume nodes. So if we take the last impulse, which is here down, you can see that this breakout goes straight in a flag. If you looked at this area here, we had a low volume node above this flag, because all the volume is down here. So we only had volume, and this has gone to the end, which is not helpful because we've filled it in now. So we have nothing there. If we go back here, we've got a big low volume node from here to here. So we know we've got range in this area. So it's the same if we look at the LDX, which we played. Again, you've got a flag into a low volume area. So you basically got a free trade here from the break of the flag up to this 265 level. So that's a free trade. So we're flagging into this area. And obviously, if you did the lessons on low volume nodes, so we've got one here as well. So as soon as this breaks, it should really see here. But if we've got a profile with a low volume node like this, then the first move, it fails. Second move, it slices through. And then when it comes back down, it fills it in. So first move up, it fails. If we get that flag, then what we're doing is we're trapping here, which is pulling in all the cells from here, and it's failing them off the demand underneath it. And then the shorts from in here that are wrong play the fill through. So if we're getting this flag, we've got this as our straight range already, so we don't have to sell until here. But if we're trading a flag here, going into like a high volume node with a VPOC above it, then we don't have range here to trade into. So we're guessing either this is going to be super slow and boring, or it's probably going to fail. So that's why we want something that has this low volume node and these like gaps or something like that to trade into, because we get the speed and we can get our trade fast. And that's why we get moves like these trend day moves on Gern, because we're going straight into low volume nodes. We look at Alex, or what was the one that moved? Alec moved. TRHC, I played this one, whatever it is. There we go. So same idea here. If we look back, so we've got a flag here into this shelf. So we're flagging into this shelf here, and then we've got low volume node up to here. where we've got their next liquidity level. So it was basically a free trade from here up to this 541 level, which I put in as my liquidity zone, which is in here somewhere. There we go. Use that profile and we can zoom in a bit. So we can see this flag again was flagging up to these shelves here, which take us through into this low volume node all the way up to here where we find liquidity again. So this is our free trade zone, and that's what we want to find with these flags. So that's why we put some as A plus and some not as A plus, because they need to have this speed over that zone. A lot of them can be soaking, but they're going to smack something 20 cents above it. You're not going to get the range in the trade that you want to get the range in. So we need this area here to give us the range. We need these low volume nodes to give us the speed so that we're not sitting this trade for so long that it bores us into selling. We want to know it's going to move within the next day or the next 2 days, and we want to know when it moves we're going to make money in 1 or 2 days. So we're not swinging for 3-4 weeks, we're swinging for maybe a week at most, and we're still making 30-40% minimum. Same with ALEC here, so ALEC moved. So again, we're flagging up to this shelf here. When we break the shelf, we've got a straight low volume node up to here where we had liquidity again. We're coming into volume areas here. We had a dodgy wee shelf in here and it kind of played out intraday. But the breakout was over this level. So we soaked and we broke and then we'll go up to here. And that's our first kind of main target. And you can see this in like the bigger profile. You can see how big a zone that is. And that's what we want to trade into to give us the speed. And we want the trap to be on the bottom of it so that the shorts sell, or the shorts cover to buy through this whole zone, and we can just ride that move. So that's what we want to do, is trying to... The last thing that I want to go through, which is what we covered in the first one as well, is these Momo MAs, which I will turn back on. Oh no, maybe I'll not turn them back on because I've deleted them. There we go, they're on this one. Right, so our MAs. So we had our daily flag, like we went through last week on Kern, and we had daily Momo. So obviously we've got the 9 EMA above the 20, 50, 100, 200 SMA. So all of this has Momo, but if we go down the time frames, we want it to be on all of them or coming onto all of them, which we have as we go up this initial trend. And as we fail down, we start to lose it. And then you can see when we lost Momo is when we get this chop. But once we got that kind of mid-flag break, and once we bought in here, they started to straighten back out again. So we got the 9, the 20, and the 50 curling in the right way. So once we have these kind of slower ones in the right position, the fast ones are easy to change. So the 4 hour came back pretty quickly. So I used daily, 4 hour, 1 hour. Again, a lot of chop in here. You can see them start to get in the right direction here as they all start to curl back up again, which was the day after our second buy. And then we got Momo on the move. 30 minutes, we've got Momo on the move here as they got set that day. Same with the 10, the 15. Again, trend move. The day break had Momo. So it flipped over as we opened, and it's the same on the 5. As we got it right out open, we got Momo. So you can see what happens when we get that kind of fractal, every time frame has Momo, as we get that beautiful trendy move through the low volume node. So that is like our epitome of confluence, is those 3 things. So we've got the trap, we've got the low volume node above it, and we've got Momo on all time frames. Is basically I don't sell until it hits where I want it to go to sell. So a whole way up here, did not need to even touch the trade. All I was doing is sending gifts to Boba. And then we got up here and I could start looking to scale out some. and then when I can see if this curls again and goes up even higher, I can again look to try and sell some. But this is why I can go and watch Shrek during the day, is because of these setups. So getting into the right position, as soon as we get this on all time frames, I know it's going to be a trend day, so I got my trend day. And that's why it's nice and simple. So those are what we need to have in there. Tattoo them across your forehead. So we want enough volume for there to be a trap. We want a low volume node above it to give us the range to break out. We want more echoes. And that will give us our speed. That's when we get trendy. Okay. And I'll get that tattooed on your head. And then I won't see anyone doing a butch selling here 2%. You get the whole move up. And the whole only reason we get this whole move up is because we had a strategy for the trade. So we knew when we wanted to look to start buying. So we called it, I think we called it in the room after this higher low. So we knew we were wanting a dip buy. So we got our dip buy, we added to our core, and we had a strategy for, right, we get to here, I know I'm going to get speed on the move. So I want to see you do something good here. I don't want it to just look bearish. It didn't even slightly. So I know I'm going to get this sell. And I can just hold all day until I get this sell. And that's why my trades may be boring, but they work, and I make good money and good percents. And I don't have to try very hard. This is why I can take the piss most of the day. So I think that covers peasant. I think that covers everything I wanted to cover in terms of why some are better than others in terms of the flags, why and how I trade them and where I get entries from, and how I don't spend time wasting position sizes. So I don't really have anything else to cover unless there's a shit ton of questions, which I'm not seeing many. But what I did do was I put a list of all the flags I found on the swing floor as of Friday. I think 4 or 5 of them are already up 10-15%. And there's more flags being made on Friday, which are getting in the right place. I put a scanner here as well, which is pretty simple. It's just an average volume, and then over 20 and the 50. So at least you know you've got some part of the mobile. And all you guys need to do is just chart these flags, find the ones that have low volume nodes above them, and then put alerts on when you think it's changing from being bearish to neutral into the bullish zone, and buy when it's in that bullish zone. And then you've got your risk made, you've got your targets at the other end of this low volume node. And as soon as you get the Momo, you can just sit and trade all day and watch the money. So you can chart as many of these as you want. You can send me the charts of as many of these as you want, and I'll tell you if you're doing it right, if your plan's right. Tell me how you trade it, what you'd be looking for to get in. And we can go through all of them, because these are like one of the easiest setups you can trade. I mean, we all do it slightly differently. I mean, we do it better than me. Ariel trades this way, he's got his own way of doing it. Kalamagi trades this way, he's got his own way of doing it. But these daily flag setups they're as simple as you can get. You just need to find like your own nuance and how you want to play them, but that's how I play them. By trap volume. In large volume that comes in prior to the flagging action, moment or something that might cause shorts to be trapped. The cat's pajamas. By trap volume, you mean large volume that comes in prior to. No, so trap volume is what we mean when we were talking about gearing at the start. So when we lose this trend move, we need another volume trap to form. So that wasn't enough for a trap. These days we're starting to get enough for a trap. By here we've got a noticeable high volume node on each side of this, so we're starting to get traps. And by the time we're breaking out, we've got a pretty well balanced distribution area here. So we've got enough volume to play a trap off, which was this top node or this bottom node here. And when we added to our core here, we're basically trading off this bottom node. And the liquidity that was in this little low volume node area here. So I don't think I actually charted that last bit, but you can see the low volume node here. So that was where we were buying off for our second buy. So this is trap volume that we can use to trade. So we didn't expect it to go, even when it broke out this second time here and it tried to do the breakout, that's not really enough volume here to get, well, this is enough volume to go up, but they've not taken enough volume up here to weaken this, so shorts can still try it. Once we got the third touch over here, we had enough volume at the top end that we've soaked in all of the sellers, or as enough of the sellers as we needed, that we've trapped them coming in from the top, and we've trapped these people down here trying to sell through the bottom, that these traps can break through this. So the last higher low here could take out the sellers up here pretty easily. And then when we opened up the flag here, everyone down here trapped. So they had to do all these dips on this day here. That was them getting out of their positions. All they needed to do was hold this level. And everyone under here they covered. But yeah, that's what I mean by trap volume. So we need a good enough profile up here that we've got shares and traders and positions in here to give us a move, because we don't expect people to buy every single strike price, every single limit, sell everything that's in the order book and the ladder all the way up to these levels. We want people on the wrong side of the trade to make the trade for us, and we just hold our position here and sell up here. That's what smart, decent institutional traders will do as well. They'll have positions here, they'll have positions like way down here, not in VIX, but they'll have positions down the chart down there. And then they'll sell here. They're not buying this move. This move is these people that were selling down in this zone. It's them covering. That's why we don't buy in those. We want to buy where people are wrong. That's trap volume. ETL looks awesome, but nothing to play off right now. That same one that they asked for. Yeah, you do. Okay, go on, take a look at it.
Mommy? No.
Yeah, it's one of these ones that's either going to blow its load or blow up.
Mommy, did you give me this?
No, that's to hit your pinata with later, so we can open it up. Do you smell that?
Right. Yeah, I mean it's pulling the liquidity down from there, but maybe just it was nice a flag where we've got that kind of initial good move. So, I mean, our flag was technically this bit here into there is our actual flag. So we're soaking above this mid zone, but they're really struggling to do much up here. Even when they broke out, they failed it. Generally, when they fail the top of this, it tests the midpoint. So you can keep buying this midpoint until the midpoint fails. But yeah, this move seems to be off of this trapped island here, is what they got this from. Kind of feels like they might be redistributing into that area there. Kind of like what we were talking about in terms of like the three stages of the trade was obviously that went kind of, that was your bearish move, and then you've got kind of neutral here, but this isn't really, not really bullish. It just re-neutraled again there. So you'd probably be better for it to come back down and try again. Because if it just keeps soaking here, you kind of feel like it's going to do something like that. I mean, could be wrong, but not as nice a flag as the other ones. This bit here was a better flag. That was your half point. Had your neutral and then your bullish and then your breakout. But yeah, the stages aren't quite the same in this. It's kind of just holding the flat level right now. I mean, if it goes up in higher lows like that, you might get something. Yeah, slightly interesting one. Probably not A+, put it that way. So it's definitely a flag. And there's definitely someone getting trapped. But depends who it is. And your risk, I mean, your risk isn't quite as easy here because you're almost risking off the halfway point in the flag to try and be right. Yeah, pretty much. You got any other questions before I go and have dinner? Yeah, make it look easy, but I've just done it for a long time. But it's better to perfect certain trades than try and do everything on like 1 minute charts, because I mean you blow yourself up and you knacker yourself out try to take so many trades for 0.5% when I mean you can trade these and get good percents. Not really doing much at all. Just being patient, waiting for the right trade, and then a run. Best one of the year. So this has been trapping for weeks. If I get on the waters to see if I can keep going. So now we've got like a mini flag on top of this giant flag, on top of another giant flag, on top of a liquidity trap here. So this was the initial trade that we would have been looking at here. I mean, you can see the eventual range some of them get. That's like 1 up to 4 in a year, which we probably don't want to hold it for, but this is setting up another giant one if it wants to start moving again. And I mean, that's your low volume node there up to 10. Yeah, no worries, guys. go make some dinner, but I'll be around anyway if anyone's got any more questions. I'd go through the flag list and chart them and find the ones you like, even if you don't want to play this setup. It's worth learning. I'll see you guys later.